Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, March the 16th, 2017. Looking at a chart of gold, you can see that today was a continuation rally from yesterday's breakout. So gold is setting itself up now, and 1250 should be in play sometime shortly here, as long as the market can maintain its bullish momentum. Looking at silver, you have a similar story here. Um, for the most part, silver has been a little bit different than gold. You can see here that right now it's showing you that it's overall weaker than gold. We had a failed attempt at a continuation pattern today. And as we're already trading into tomorrow's market, which is this bar right here, you can see that it is still weak and is threatening to go and fall back down into the Kumo cloud and lose its bullish momentum, which sets up further declines for next week unless the market can finally get a strong close on tomorrow. That will be great, because then that would set up the rally for next week. So can the market close above 1745? We'll have to wait and see. But that's all you would need, is a close above 1745, and you'll be good to go. It opens up the door for a continuation rally for next week. Looking at the US dollar continues to lose momentum, continues its further declines right now, and is threatening to close below par. So if you lose your parity in the dollar, that could bode well for commodities moving forward. It should be noted that on the weekly chart, the US dollar still has its bullish complexion. So we'll need to see if momentum can be regained before we start throwing in the towel. But as it is right now, the market is threatening to turn bearish and drop below the Kumo cloud, which would open the door to further declines and severe drops below parity. Before we go on to the next chart, I just want to say that the markets do have a lot of momentum built into them, but overall it looks like yesterday's pop may not be all what it was cracked up to be. Now, I did tell you weeks ago that there were major algorithmic shifts happening underneath the surface, and that I was concerned with what may be happening here. Well, I wanted to let you know that in the next couple of days, I think a lot of people are going to be surprised to see some of these algorithmic shifts play out. Now, the Fed didn't do what I anticipated they would do, which is beat down the metals and sell that rally hardcore. That didn't happen yesterday or today, so I was surprised by that. What I'm not surprised by is the price action and what's happening underneath the surface. The thing that I like about trading is that, like I said, even if the market doesn't do what you expect it to do, you can still position yourself to be on the right side of it. You can stand aside during moments of uncertainty, which is what we do. It's a disciplined approach. On big event days, news days, especially like yesterday, I do not trade. I stand aside. Unless I have built up a sizable position and I have substantial gains in a particular open trade, then I can just tighten up my stops on that. I don't have to liquidate a position, but I don't put on new positions ahead of a big announcement like that, because anything can happen. So you just don't want to get your face ripped off, and we talked about that in the webinar yesterday. And in a lot of the learning tutorials in the Learning Academy, you'll learn these different disciplines and approaches. You'll learn to stand aside and let the dust settle. There's no such thing as, oh, I missed a move, because the markets aren't going anywhere. They're here today, and they will be here tomorrow. Another thing you should note too is that, like I said in the past, making predictions and things of that nature it's all fun and well and good, but when we are basing it on price action, when you're looking at a chart and you're seeing where the momentum is. Markets can shift and turn on a dime like we had yesterday. Because of the news and because of what was anticipated, markets did turn on a dime. If we go back to that gold chart, I'll just pull that back up here again, just to show you here. You're not wrong in looking at price action. Price action is there. You saw that we were here. Momentum kept coming off. It was bearish. There was no reason to, there was nothing that says buy on the chart. All right. Market had not yet stopped declining. What did we do? Finally, the market turned on a dime and we got a strong close and we got a continuation today. So markets can and often do turn on a dime. It's just the nature of the game. But this is all news driven. This is based on news yesterday, and then we have this attempted follow through today. But as you can see, not all markets within the sectors are rallying. Take for instance the GDXJ. GDXJ, for the most part, had a powerful uplift yesterday, but then look at you today. You're starting to come back off. This is key to watch, and you're still inside the Kumo cloud of death. Prices could continue to further come back down. This rally could end up being sold. Not all of the mining stocks within this space participated in the move. You got to remember that too. All right, so you have to watch these markets. All right, when you see a thrust move like this, you want to see some continued follow through. All right, a one-day a rally does not a trend make. You still have to watch the price action and see what happens. So today, I mean, not today, Friday will be critical to see what the market does and where it closes, because then that would open the door and set the stage for next week. Will we have further declines? Will we come down to the trend line? Will this momentum line gain strength? Will the market be able to maintain and stay above the momentum line? There's a lot of questions here to go into play. So you have to look at that, and you trade what you see. All right, just because certain events that you think will happen don't happen, you still trade what you see. That's why you can't just trade off of fundamental news alone. I tell you that over and over again. You cannot, because you don't know how the markets are going to respond based on that fundamental announcement. All right, markets can rally or crash on good news or bad news. It's just the nature of the beast. So with that being said, that's why trading is more than just saying, oh, looks like the market's going to rally. That doesn't mean I'm going to buy in. Even if I think the market's going to rally or crash, it doesn't mean I'm going to buy in. It means that I'm anticipating a certain action, right? And then you plan for that action. Like when I was telling you that I expected the Fed was going to come in here and punish gold because that's what they've been doing. All right, so you have reason to expect continuation because every rally during this downturn was sold. All right, we rallied here, it was sold. We rallied here, it was sold. We rallied here, it was sold. We rallied again, sold. Rally, gave a little bit of that rally, sold. All right, so until the trend or cycle is broken, you anticipate for all rallies to be sold until we break out of that and we can get a clear trend going. All right. Now, there's one thing different here in the nature and the makeup of this gold chart that you have not seen back in here. All right. Can anyone, by looking at the screen, tell what I'm about to show you that makes this time a little bit different? Back here, it didn't happen. Up in here, it didn't happen. Here it didn't happen. Here it's not happening. Here it's not happening. But here, something different is happening. And do you know what that is? This is different than this, different than this, different than this, different than this, and different than this. Let's blow it up and look. Do you see what it is? Price action and trend lines are trading outside and above the Kumo cloud. In previous situations, your price action and your trend lines were operating apart from each other. You had price action outside the cloud on top, but your trend lines were not. All right. Each time it didn't happen. You had a nice little run up here, but it could not sustain because you did not truly broken out of the Kumo cloud. Look back here. Same situation. Rallies are being sold because you're not outside of the Kumo cloud. All right, that's what happens. Okay, so all things being equal, we changed this time. We didn't break down and get into the Kumo cloud. We actually broke out of it. Now, can the market sustain this? You got price ramps coming up. So the trend lines are going to have to turn up with the price action in order to keep this sustained, in order to get back up into the 1250 category. All right, so that is what I am anticipating and watching going forward. Or are we going to have this type of scenario here where the Fed comes in and just starts selling again? So you have interesting times ahead of us. Let's take a look at the NASDAQ 100 one more again. As you can see here, it's still managing to hang on. All right, nice quiet day. All right, and yes, we closed above that momentum line here, but the question is, can we stay above it, or is the price going to start to break down and come down? So that is what is being watched right now. Tomorrow's Take Back Friday. You know what happens on Take Back Friday. You know what happens. The NASDAQ 100 is a candidate for Take Back Friday because it meets the criterion. Here's natural gas having a problem with that $3, and we're now in decline, losing momentum. Downside pressure coming. Going to need to regain this bullish momentum for Friday's trading. Need to close above 294. Can the market do it? Or is it going to fall back down again? These are questions that have to be answered, and only the market can answer them. So we'll have to see where we go from here moving forward. I showed you the GDX J. So let's take a look here real quick at the J now, because it's going to follow suit. Here you are, price action happening below the Kumo cloud, trend lines below the Kumo cloud. There you have it. We're above momentum though, so we could get a pop. We're going to need to close above 846, but even that only puts us into the Kumo cloud of death, where price action can be volatile and swing up and down. So we got a lot to overcome and a lot to do here. And it's all going to depend on what the miners want to do. We're at a crossroads. Markets need to confirm their moves. Got to get out of the Kumo cloud. Got to get this momentum up and going. So we still got some work to do in the mining sector. Yesterday was a good start, but now we need follow through. So with that said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And if you want to throw pie in my face because I was wrong, no worries. You'll come to find out, for those of you that are new to this channel, a lot of my prognostications turn out to nothing. I am more wrong than I am right. But you know what? I still make money in these markets, even being wrong. Come learn how to be wrong too and make money in the market. It's not the people who quote unquote call the market correctly. It's just guessing. It's the people who make money. Can you make money? That's the question. And can you do it consistently? And can you make others rich with you? PulseWaveTrading.com. Come see for yourself. Peace out. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, March the 16th, 2017. Looking at a chart of gold, you can see that today was a continuation rally from yesterday's breakout. So gold is setting itself up now, and 1250 should be in play sometime shortly here, as long as the market can maintain its bullish momentum. All you would need is a close above 1745 and you'll be good to go. It opens up the door for continuation rally for next week. Looking at the U.S. dollar continues to lose momentum, continues its further declines right now, and is threatening to close below par. So if you lose your parity in the dollar, that could bode well for commodities moving forward. It should be noted that on the weekly chart, the U.S. dollar still. Looking at silver, you have a similar story here. For the most part, silver has been a little bit different than gold. You can see here that right now it's showing you that it's overall weaker than gold. We had a failed attempt at a continuation pattern today. And as we're already trading into tomorrow's market, which is this bar right here, it has its bullish complexion. So we'll need to see if momentum can be regained before we start throwing in the towel. But as it is right now, the market is threatening to turn bearish and drop below the Kumo cloud, which would open the door to further declines and severe drops below parity. Before we go into the next chart, I just want to say that the markets do here, you can see that it is still weak and is threatening to go and fall back down into the Kumo cloud and lose its bullish momentum, which sets up further declines for next week unless the market can finally get a strong close on tomorrow. That will be great, because then that would set up the rally for next week. So can the market close above 1745? We'll have to wait and see. But that's all.